We welcome Mr. Navneet Munot, the MD and CEO of HDFC AMC. To welcome and introduce our next speaker, I call to the stage Ms. Gladys Hepzibah.
Good evening, everyone. Mr. Navneet Munot is the Managing Director and Chief Executive Officer of HDFC Asset Management Company Limited. He joined the firm in February 2021. HDFC AMC manages over rupees 5 lakh crores. HDFC AMC manages over rupees 5 lakh crores across equity and fixed income mutual funds for over 75 lakh investors across the country. He is also the chairman of the Association of Mutual Funds in India. Mr. Munot is 3-decade veteran of the financial markets. Prior to joining HDFC AMC, he was the executive director and chief investment officer of SBI Funds Management Private Limited. He is a chartered accountant and a charter holder of the CFA Institute and CAIA Institute. Mr. Munot is one of UWC's longest and most steadfast supporters. He has shared his expertise on the markets at this event in earlier years and helped us in many other ways as well. Thank you, sir. We are honored to have you with us. May I now invite you to speak to a distinguished audience, please.
Can you put those slides? Mr. Alagappan, Board and Leadership of United Way of Chennai, Ambassador Gokhale, Mr. Agarwala, ladies and gentlemen. It's always a pleasure and a deep honor to be part of United Way of Chennai event. I've been part of this for many, many years. And this is unique in many ways. On one side, we discuss wealth creation, discussing economy and markets. On other side, we look at what is the right use of wealth. It is such a joy to see all the award winners and the work, the social work that all of you do. My sincere compliments to all of them. It reminds me of revered sage Thiruvalluvar's words, there is no greater wealth than virtue, and there is no greater loss than forgetting it. Also, my special compliments to Selvi, Aruna ji, and Lalita ji. Whenever people ask me, and Mr. Agarwala mentioned about India, all guns blazing, and feels very positive about and asking private sector to take larger bets. I feel extremely positive about India over the next 25, 50 years. I think we are going to create an economic miracle which is unparalleled in human history. We are going to create an economic miracle which is unparalleled in human history. And I'm going to talk about a few of those things, but the thing that makes me most bullish about India is the rising power of women. That's why I took those names, and I hope that these women with special abilities continue to inspire millions of other women who are going to chart a different story for India over the next several years. Ambassador Gokhale ended with the sentence, so we have to brace for a decade of uncertainty. I think I would also start by saying the world we are in, the only thing I can say with certainty is continuity of uncertainty. The word VUCA is like a cliche, volatile, uncertain, complex, and ambiguous, but we are in that world, and there are many things changing. I mean, he talked about the geopolitics. In fact, some of these conflicts are so big that some of the other conflicts, Armenia, Azerbaijan, or many of them, we don't even notice, but they are quite big. I mean, if you look at the Africa, which is several times has been talked about as like the next big frontier, but the news flow from many parts of the Africa wasn't pleasing. So is the case with several parts of the Latin America. Sir, I'm sure you would agree. He talked about Colossus, the second largest economy in the world, and the news flow from China, one of the largest military power, the policy uncertainty, the property bubble, the rising amount of, the huge amount of debt problems that they are dealing with, pollution, many challenges, and China has been the biggest growth driver for the world for last 20 years, and as the world has to deal with with not only their slowdown, but many other aspects that he talked about. We can, I mean, these are just some of the newspaper cuttings from last year, the world we are in, to show you the world we are in. I mean, look at the largest economy in the world. It got downgraded last year. The public debt to GDP is the highest level since 1930s and 40s, and we have to see over the next several years how the central bank will deal with it. On one side, they had the highest inflation in the last 40 years, for which they have to keep real rates in positive, but on the other side, if you have such a large public debt to GDP, to reduce that burden, you have to keep rates in the real rates in the negative territory, and it's going to be very, very tough. And then the weaponization of dollar happened at a time when they have to borrow so much of money over the next several years. Last time when US had a kind of challenge of a large debt, bulk of the debt was domestic. This time, a large part of the debt, they are also dependent on the world. They got downgraded. There are many challenges with the largest economy in the world. Of course, I can sit there. Of course, the politics less talked about is better. The 3 banks that failed in US in last year were bigger than the banks that failed in 2008 and created the financial crisis, and I'm sure everybody has heard about the challenges in the commercial real estate sector. One of the oldest and the most prominent bank of Europe failed last year, had to merge with UBS. I can go on. I mean, Europe's problem, variety of challenges that they have, whether it's immigration, whether it's slowing growth, whether it's aging population, the overdependence for energy on Russia, for defense on United States, so on and so forth. And look at the challenges that UK has got. They're finding it very tough on the fiscal side. And Europe, I mean, the Europe and UK needs a new infrastructure, but there are many challenges for that they are facing. I can talk, I mean, this was the hottest year. The climate risk is for real. The previous speakers have talked about it. Now, this is the picture of the world. Now, I feel so proud of the country that we are in, and why I feel so positive about India. Mr. Agarwal has mentioned that all guns blazing. I mean, look at some of these headlines. Aren't all guns blazing? In a world which is hyper-divided, in a world which is so fragmented, in a world which is so divisive and polarized, I mean, India led G20 with Vasudhaiv Kutumbakam. The whole planet and people are one family. We inducted African Union into G20. We became the world's most populous nation. We became the 4th largest economy last year, the 4th largest stock market by market cap. We reached the part of moon where nobody has reached before now, citing sun. Our weight in MSCI EM, over the last 3 years, China's weight has gone down from 40% to 25%. In the same time period, India's weight has gone up from almost 9% to 17% or so. The FPI inflows were at a record high last year. I mean, we have seen huge amount of money coming into our equity market over the last 3 decades, but first time we got inducted into a JP Morgan Global Bond Index. We got, of course, recently into Barclays Index as well. Our services sector exports has been a phenomenal story over the last several years, and I feel very positive. I mean, when we look at the talent in India, we produce more engineers every year than US and China combined. And of course, as he said, that if you have that education and with the right training and the technology which is making it more feasible for us to become a larger and larger part of the global service exports ecosystem, our foreign exchange reserves touched like $635 billion or so, the 4th largest in the world. We created a new record in remittances from NRIs. The government tax revenues, thanks to the tax reforms and everything that we had, continued to increase. I can just go on. I mean, when we look at the climate change challenge and what India is doing on the renewable energy side, on infrastructure, on digital, UPI, and of course, we got 100 medals in Asian Games. It just shows, I think, India's youth. It really, and of course, last but not the least, the industry that I represent and all the hard work that we have done with our ecosystem. Today, I mean, we have always been told that Indian markets dance to the tune of global liquidity, global sentiments, or global risk appetite, or global liquidity cycle. But first time we have seen that the Indian domestic investors, the way they have provided the stability to our markets, and these numbers have been rising. I've always been told that If US market sneeze or if global economy sneezes, India gets a fever. This time in the first slide I showed you many countries have got fever. We are yet to sneeze, thank God. And thanks to all of you. We are indeed in Amrit Kal. I think after all of this, nobody should have any iota of doubt that we are not in Amrit Kal, and over the next 25 years really belong to us. This is our journey towards a developed country. Now, what feels like being in a developed country, right? The first, you need to have a high quality infrastructure. That's digital infrastructure, social infrastructure, and physical infrastructure. Thanks to everything that our policymakers have done, and the private sector, and of course the adoption of technology by more than 1 billion Indians, I think our digital infrastructure, the DPI, the digital public infrastructure, is absolutely the best in class in the world. As far as digital infrastructure is concerned, whether I talk about the UPI, you touched upon Bhashini, you touched upon many of the other things, what we have done is absolutely unparalleled. When you walk into the airport and see using that, what is that called? The Digi Yatra, and you feel the difference between any other country and India, and I'm sure this is just beginning. We have a long way to go. In a very short period of time, in a decade, we have moved from the most data poor society in the world to the most data-rich society in the world. And it has an exponential effect. Over the next several years, we are going to see the real power of it. On the physical infrastructure, we are moving very fast. I think there is no country in the world which is building the physical infrastructure at the pace at which we are building. I've said this, that one Oscar was given to the RRR, the another should have been given to RRR of India's physical infrastructure, which is roads, railways, and renewables. And over the next several years, we are going to see something similar in many other spheres of the infrastructure. This is where India hasn't done a good job. Mr. Agarwal had talked about it earlier, I think on the education front. But my belief is that I think we can leapfrog. India leapfrog. We didn't have personal computers, we straight moved to the mobile phone. We didn't have the fixed line, we straight moved to, we straight moved to the smartphone. We didn't have the bank branches, we straight moved to the UPI. I think in education, healthcare, in skill development, in some of these things, technology can play a role where I think we can just leapfrog. I write an annual letter, Person of the Year for last 2 decades or so. Last year, my Person of the Year was a new age of health tech, a new age of healthcare in India. I think in next 5 years, we are going to see something very similar what we have seen in digital finance. In a short period of time, nobody would have projected that every Indian would have a bank branch in the pocket, or maybe a wealth management firm in the pocket, the way we are using digital. The way digitalization of finance has happened, we are going to see something very similar in healthcare as well as on the education side. And with the infrastructure, the other thing that you surely need as a developed country is the structural reforms. So right from the, some of these are not talked about as much in terms of the power of those reforms from their long-term implications perspective, whether it's a monetary policy framework, keeping inflation around 4%, anchored around 4%, a GST, I'm sure you all know about it. In every single investor meet that I do, I always ask people, what is the single biggest reform that has happened in last decade in India? Most of the people talked about these. To me, what has happened in India, the biggest reform that we have undertaken in last 10 years is what I call India's UBI movement, Universal Basic Income. This is not the Universal Basic Income as we know it, crediting money in everybody's bank account of every citizen of India, but we have done something very unique. There are many things unique about India, our growth model, our development model. That's why I said this is a miracle which is very different than anyone else. Using the mobile phone, Aadhaar and Jan Dhan Yojana, and I think a right intent and many other things in place, what we have done is a very different kind of UBI. Free toilet, free LPG cylinder, basic electricity, tap water, an LED bulb, Ayushman Bharat, Sukanya Samriddhi, and then some of these things. What it does is almost 7, 8, 900 million people who have never been part of the TAM of any business, the total addressable market, this will become the addressable market over the next several years. And I think this is the single biggest thing that has happened in India. With the fiscal reforms and as the GST flows go up and over a period of time, as it has implications on the direct taxes, as government's revenue go up, they will have more money to invest into this and delivered in the right manner. With all of this, what is likely to happen over the next 10, 20, 25 years is ease of living for every citizen and ease of doing business, which promotes entrepreneurship, formalization of the economy, which has been kind of over the next several years, should lead to a better fiscal outcome as government collects more taxes. India's tax to GDP ratio has been one of the lowest, if not the lowest among the larger economy. A macroeconomic stability with fiscal consolidation on one side and the monetary policy framework on the other side, and a financial sector which has been kept in good stead with all the reforms that have happened, and that gives more confidence to long-term investors. Both consumption, because of the things that I talked about, as well as the investment over the next several years, thanks to PLI and many other things, opportunities on that side. As of now, over the last few years, it's been the government which has been front-loading or has been kind of like taking the heavy shoulder of like promoting investments, but over a period of time, I expect private sector to do the same. And as using your words, all guns blazing. So services, manufacturing, agriculture. A lot has been talked about many things, whether the opportunity in manufacturing, the opportunity in services. The one very specific I want to talk about is on the tourism. I think given India's cultural heritage, the ancient civilization and the beauty that we have across the country, the natural beauty that we have in this country, the wedding in India or the spirituality, the Ayurveda, the naturopathy, yoga, the sheer beauty of this country and the beauty and colors of these people, and as I said, the history that we have. With wedding in India or a medical tourism and variety of things, I think this is going to be transformational. And I've mentioned that as infrastructure improves with sanitation and services improving over a period of time, we can surprise on upside what we can do in tourism. And of course, one of the most important thing, historically, we have been over-dependent on global savings because our investment needs were so high. Domestic investors weren't investing for long term, and that's why I think we always were so vulnerable to the global market sentiments or global liquidity. That's structurally going down, and volatility across markets in India, equity market, bond market, currency market has been going down. That's mainly thanks to policy prudence, agile execution, effective communication, and of course the retail resilience, the individual investors' resilience over the next several years. It's very interesting, you talked about the power and the growth that China had. So India's $2,500 per capita GDP is very similar to where China was exactly 20 years back. But the difference between India's growth and China's growth is this. In China, this Shanghai index was at 1,500, today it is at 3,000. I mean, the economy has gone up has grown manifold, but the market did not deliver that growth because GDP growth was not equal to corporate growth. Profit growth was not equal to market cap. And look at India, it is a very, very different model. There are very few countries that come closer to what India has been producing, which is an economy that continuously grow at a higher pace. You have a corporate sector which is able to convert that growth into profits, which can be shared with minority shareholders thanks to the capital market structure that we have got, and a mutual fund industry where even somebody who's putting 500 rupees per month can participate in that growth. It hasn't happened in many countries in the world. It has happened over the last 30 years in India, and I feel very positive about the next 25 years of something like this. After everything that I talk about, but still the question is always in North, they say, market kya lagta hai? Or what about the market? Where is market headed? My framework is like this. I look at macro, I look at trajectory of corporate profits, I look at liquidity and sentiments, and I look at valuations. I've talked enough about the macro. The only thing I want to add is, I think, so from growth inflation dynamics, from structural reforms, policy certainty, so on and so forth, and the structural opportunity that we have. Another thing is the balance sheet. I think you talked about the corporate balance sheet, household balance sheets. It's got levered up a little bit more than what it was 5 years back, but still debt to GDP in India is lower than what it was in 2007 and 2008. There is no other country in the world, large economy in the world, which has something like that. Everywhere the debt levels have gone up very, very substantially. So whether we look at balance sheet of the macro or of the economy, or you look at P&L of the economy, of the growth prospects, you feel positive about it. On the corporate profitability, just one part I would mention that Corporate profits as percentage of GDP peaked at around 7% in 2007-8. They bottomed at around 2% post-COVID. They are back to 4.5%. I think over the next several years, if economy grows like let's say 6-7% and you add 4% of inflation at 11-12, corporate profits can grow a little faster. Listed companies at least can grow a little faster than that, given our own history over the next several years. If you look at the liquidity and sentiments, of course, I think the foreign investors have been positive on the market. I'll just say that last 30 years, since foreign investors started investing in India, almost 24 or 25 of those years, they would have been net positive investors in India for two major reasons. Number one, the structural growth opportunity and the macro top-down call on India. Second is the opportunity of bottom-up stock picking because you get variety of high-quality companies across many sectors. The third dimension that has got added for foreign investors to become more positive on India from a long-term perspective is the rise of domestic flows. The domestic flows provide a more stability to the market, reduces the volatility of the market. That makes India a relatively better market from a risk-adjusted perspective. And you can see the way mutual fund SIP has been growing, the number of demat accounts, so on and so forth. Now, with this kind of flows, we have seen markets going up and valuations have, and there's the last point I'll make, the valuations have moved up. What it needs is, over the next several years, if you look at the SIP flows of mutual funds, if you look at money coming into NPS, with insurance companies and what they invest in equity market. You look at EPFO and the other pension funds, the money that they put in equity market and the retail investors putting money directly into the equity market. We're talking about almost 30, 40, 50 billion dollars, and it's likely to increase because we are starting at a very low level of financialization of savings. Now for that kind of money, what you really need is use supply of paper also, use supply of new equity also, which is what I think over the next couple of years will happen. Maybe post-elections, you see many of the public sector companies where stocks have gone up quite a bit, they come to divest or maybe do a strategic divestment or maybe dilute from the stake that they have. Many of the PE and VC firms exit through the secondary market. Many of the companies, Mr. Agarwal talked about, corporate India needs to take large bet. Of course, they will borrow money because they are under-levered, but they will also raise equity if they are going for larger projects from a long-term perspective. What we need is a lot more supply, and this is what I expect, and that will probably balance the huge amount of liquidity we are getting. On the other side, we also need huge amount of paper. On the valuations, as I mentioned, because the news flow is positive, India, both in absolute terms as well as relative to most of the other peers, is doing well. The world is looking at India. Domestic investors have invested a lot, but I think it's more in the small and mid caps where there are, I would say, pockets of froth, but the large caps are slightly higher than the longer term average. And there are, of course, there are few other pockets of exuberance when you look at the market, whether the SME market where average oversubscription is 100 times in an IPO and the listing day gain is 40%. Which means people think IPO doesn't stand for initial public offer. They think it's an instant profit opportunity, IPO. The trading volumes on the SME, India has become the F&O, the futures and options capital of the world. Large millions of investors opening demat account, brokerage account, and trading in the F&O relative to most of the other parts of the world. I think interest in crypto, interest in some of these gaming apps, that makes me a little worried. But I also look at from another perspective that just shows higher risk appetite in an average Indian investor, higher risk appetite among younger lot, and over a period of time, I'm sure they will get guided and look at that. There is only, and just to summarize this, that the three are like dark green, the macro, corporate profitability, liquidity, and sentiments. Valuations, as I said, some of it is already captured. In equity market, you get returns from three sources: earnings growth of companies, dividend yield, and change in PE ratio, change in valuation. From change in valuation, one should not expect more from where we are today. So your incremental returns are more or less going to be in line with the earnings growth. Macro as a whole, of course, at individual stock level, it could be different. This is the last one I want to say. I think over the next 25 years, India will create an economic miracle which is unparalleled in human history. Why do I say that? Because our growth is going to be a lot more democratic, lot more equitable, lot more inclusive, and lot more sustainable. Most of the other countries, when they grew from a frontier economy to an emerging economy to a developed country, they destroyed the planet. They never took care of the people or the future of the humanity. India's growth is going to be very, very different, and I think will be the role model for future generations of many other economies who grow. The way to make money over the next 25 years is as I think probably one who had extraordinary wisdom in investing, who said that the big money is not in the buying and selling, but in the waiting. So invest and keep the faith in India. Thank you so much. God bless you.